Hello guys, welcome to another video. So Oka Sunday, there's no way we wouldn't go over Nasdaq. So if you're new here, make sure that you subscribe, because here I teach price action. We do top down analysis of certain charts. So next we're going to do Nasdaq. So make sure that you subscribe if you like this style of trading, because here we don't do indicators, we just do pure price action. So let's just remove some of these drawings so that we can start with the analysis. So let's get started. So this is the number that you can reach me on, just in case if you are interested in this style of trading and you like to get on the mentorship. So let's get started. We always start with the highest time frame, remember? So let's remove this. So this one, you can keep it there. So on this monthly chart, what do we have? The prices, remember, we always need to know where we are so that we can know what type of trades to take or to search for. So this is your monthly support, this is your monthly resistance. When we hit the support, if you've been following this channel, when we hit the support, we've been calling for rejections, and we did get it. We were expecting the price to at least go until it hits the monthly resistance. In this case, we didn't get there. We turned somewhere around there, and the monthly resistance starts from this horizontal line. So we can still go and attempt to touch it for the second time. So just because we turned there and then we came back does not mean now the support has to be broken. We do not make such what do you call this, predictions. We don't predict that a certain structure is going to be broken. We just trade until that structure is hit, then we exit, and then we watch how the market plays around it. Based on that, we know whether it is broken so that we can continue taking trades in that direction, or if we should take trades in the opposite direction, because we'll be seeing some rejections. You see, because if you're going to be going around predicting that a support is going to be taken out or a trend line is going to be taken out, you're going to be disappointed many times, because no one knows when these structures are going to be broken, which is why it is safer to just trade until they are hit. Then you exit, you watch based on what is happening around them. Then you can take trades, either continuing that trend or going to the opposite side, because a trend line or a zone can be hit 10 times, but it doesn't mean that it should now be broken. Some people, they will tell you about 3 touches and then break. That's not always the case, which is why you don't know. A trend line can be hit twice, then broken. Can it be 3 times, then broken? Can it be hit 10 times, still hold until 15 times, and then broken? You see, then how do you tell that this one is going to hold 5 times or 10 times or 2 times? Which is why you will never know. The answer to that, you will never know. So that's why you take your trade until that zone is hit or that trend line is hit, and then you exit. That's how we do things here. We don't want to be caught up in the middle of a fight between the bulls and the bears. When they are fighting, don't be there. When you only join in when someone is won, and then you just rally behind them and trade in their direction. When they are fighting for power, you stay on the sidelines and just watch. When someone else wins, you are behind them. That's how you should trade. You are like you are a friend with the trend. When they are fighting, stay out of trouble. So that's basically all that we have. So this support, even though it was hit here, we went there, we coming back, we said no, just because that is happening does not mean now it should be taken out. So this can just be a pause, and then until we hit the area of resistance. But we'll see when you're moving down. So that what you just need to take with you from this one is that you are still very much closer to your area of support, meaning you've got more space to go there than to come here. So let's now move down to weekly. So you still remember what we said here on this one. It's unfortunate that we didn't get that, but I'm sure some of you might have gotten it if you're trading smaller time frames. We said on this one, this trend line, I always draw it when you're making analysis on this one. We said that was our trend line when we were bearish. This was our area of resistance when we were bearish. And then after forming this support or this swing low, we pushed up and broke both the trend line and the resistance, meaning that's when we became bullish. And we do understand that when the price, just because the price is bullish, does not mean it should move like this. And a healthy trend moves like that. So this could be just a pullback before we continue until we hit that. because if you're moving like this, it's very easy for you to do that. So meaning it's not safer there. You can just change here and there and come back and hit my stop losses. So you want the one that's gonna breathe, and then as long as it's not breaking the low, as long as you're still making a higher high and a higher low, then you're still bullish. So on this one, we had marked our zone here. If you still remember, the way we had marked the zone was that let's just move this out. We had marked it here to say that this is the support that initiated the move and went up like that. But in this case, unfortunately, we didn't get that retest that we've been calling for, to say it's very fresh and it has accomplished a lot. It has accomplished a lot. So we were hoping that it will reach that. But you can see that, yes, even here, there's this candlestick. So some, they could have just said, from around there, if I get reasons to go long, I'll go long. Unfortunately, you just need to make sure that you watch the market. When it touches that area where you're saying, from here, anything can happen, that's where you have to just make sure that you zoom in on your execution time frame, and then you watch how the price plays there. If you are seeing some signs of rejection or reversal, then you can start to plan your trade there. In this case, the zone that we were hoping it would get to, it didn't get to it. And so meaning this is the support that we have on this time frame, and then there is your resistance, right? So you still have a very huge room to hit that resistance. But remember, if you're getting trades, once you hit this, you still need to keep in mind that your monthly resistance has been hit. So you don't have to try and force for the price until it gets there, because it can just feel the hit from this bigger one and reverse. So when you're planning your take profits, you must still involve this guy. So it doesn't help in you saying I have a buy trade and then I'm gonna exit at this H1 zone there. But this is a monthly resistance. It starts here. What if the sellers start to kick in and then they do that? You see? So that's why you need to know where your bigger structures are. You can trade on your H1. We are not saying go on monthly and then when you're seeing a monthly zone, execute. No, we're not saying execute the whole thing. But you just need to know where that whole thing or the zone on the bigger time frame is at, so that when you're trading on your smaller time frames, you do not go against them. So basically on this one, the support is here, resistance is there. We still have a big room to go up there. And another thing that you can take from this is that if you still remember the chart that I gave you on US CAD, is that here we are having what? Bullish engulfing. So this is also a sign that says the bulls are sort of about to take over, but it doesn't mean that we can't come back. We can still come back, but you're just saying, based on what we are having, the bulls have got the upper hand to at least push until there. But we'll see when you're moving down. We're not saying when the market opens, you must just go and execute. No, we are using the structure that we are seeing here to make decisions and say, based on what we are seeing here, this looks like on this time frame, we've got higher chances of doing 1, 2, 3. That's how you make your decision. You don't just wake up and say, I've got a bullish candlestick, now it means I'm bullish, I have to buy. And no, that's not the case. You must be able to, as much as you can focus on that one candlestick, you must still be able to read it when it is inside, alongside other candlesticks. So you must still be able to read the entire structure, the bigger structure, when you're involving other candlesticks. So that's all that we have on our weekly. So this is what I teach. We don't use indicators. We trade what we are seeing. So this is our daily. And on daily, if you remember, we had marked our daily support here, and we said yes, it has been hit, and maybe the price might not get to the support. And remember, even on that weekly, you had what? You had a very funny candlestick from around there. So there is your thing. If daily was your higher time frame, then it means once it is hit on your smaller time frames, you'll be searching for trades to go long, basically. So look what happened. We touched it here, we went up until the opposite structure. I want you to follow me carefully. So that's why I'm saying when you are buying, you are targeting the next structure. When that structure is hit, you are exiting. You're not gonna say the support is gonna be broken. How do you know that? So to stay out of trouble, to save yourself, a lot of heartbreaks, if I can put it like that, when the opposite structure and you can identify it and say this is the support or this is the resistance or this is the trend line, when it is hit, you just need to take your profits. Maybe you can just leave one trade running, but you need to make sure that it is also managed well in terms of the stop loss. Make sure that you place the stop loss at the right place. When that zone or the trend line is hit, you exit, and then you watch how the price plays around that structure. So whether the price looks like it's gonna break or it's gonna retest, and then if it's broken, then you can start searching for trades in that direction, knowing very well that structure does not exist anymore. But until it is broken, you cannot trade against it. You cannot trade like it is not there. So in this case, the price hit the resistance and then it came back. And just because you're coming back does not mean you have to violate the support. The support will remain active until it is violated. No one knows when it's going to be violated, which is why if this is your higher time frame, you can still search for trades with confirmation. You can still execute. You see, that's how you should trade. You hit the opposite structure. Yes, the opposite structure has been hit before here, but it doesn't mean now it has to be broken. We just move towards it. Kancane kancane. So here we did have this sort of bullish rejection candlesticks, or yes, bullish rejection candlesticks. So I can put them like that, or candlestick of indecision. So maybe that's where you're like, oh, the bulls, maybe they're trying to come in and defend their zone. But look what the next candlestick did. It was like a bearish engulfing. This is where we were worried to say that why are the bears engulfing the structures at the support? Because the support, that is where we want the bulls to be stronger, not the bears. Why are the bears still have so much strength to engulf the structure? So that's where we're like, let's just wait. Maybe that's where we're like, this maybe will just, continue until it touches that bigger the weekly one that we wanted. Unfortunately, that didn't happen. The following day, the bulls came back stronger and reversed that bearish engulfing. They caused what? A bullish engulfing, and then from there they took off. And here the bears tried to come in, but they still ended up with what? That tail below. And they still pushed up because of what? Now we can still say, I don't know if you'll agree with me here, but now this is what I'm saying. This is what I'm saying. We can still say that the price had this, because this is definitely looks like that. If you take it like that, if you feel like it's not, then you can put it from there and say you did have a bearish trend line there during this pullback to the downside, and now that the thing has been taken out, you can say the move from this caused the price to move up, and then now it is inside the area of resistance. So now if the price was to take this out, maybe you can get like a pullback, then maybe you'll be able to catch. That's if you're trading the bigger structures like daily. If you're executing here, you can't chase the price and execute now and say, because we know now we've got high chances of going up until we hit that monthly area of resistance. But it does not mean you should chase the price. Wait for a pullback, then you start a new wave. It's safer that way, because what if you enter now chasing the price and it's time for a pullback? You see? So you need to know, you need to be able to identify the key areas where you're going to be searching for your trades. So here what we can take with us is that we are inside daily resistance, and this is our daily support. This is the new support. This was the old support. Now we have a new baby in the building because of what this baby achieved. So you can shift that daily support. We've had it here for a while now. This year used to be our daily support for a very long time. So now, because we have a new baby, we need to make sure that we update our structures. So we can say this is our daily support, and this is our daily resistance. This one here. Yes. This is our daily resistance. So now we are inside the daily resistance. We are not saying this daily resistance is going to be broken, and we're not saying the daily resistance is going to hold. We will just continue zooming down, monitoring how the price is reacting from it. Then based on that, if you get some signs of weakness, and then you can go to the downside. But if you got trades from around there, it means now you know where you are. You don't have to take a guess and say this has to be broken or it has to be respected. That's where you exit, maybe leave one trade, but still lock in the profits. And then you watch based on what happens here. Then you can decide, oh, it looks like this is a better outcome. So let's see what is happening on H4. Dun, 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 dun. So on H4, this is what we have. This is what we have. Let's just use the pen. So this is your H4 area of resistance that you are hitting there. And the resistance is very fresh and it is found inside your daily resistance. We're not saying because it's fresh, it has to be respected. But we're just saying if you're holding your buy trades, be careful. You don't want to end up donating. And then move to the upside. It's got its own bullish trend line. So this might just even pull back until the trend line. All right. And then from there, we'll see what happens. But my biggest wish would be that we just go up and just take that one out, and then you can pull back. When you're pulling back, we will try and buy from this bullish trend line, because we know this one would have been violated, and then it means now when you're buying from this, we're targeting that one. Look at the profit margin. We've got a huge space until we hit that. So now if you're holding your trades, be careful of where you are. Be careful. We might just come towards this guy. You might just pull down, because you know what, we've been moving up for a while now, and the candlesticks, even when you look at them, they are not as convincing as what we're having here when you're moving to the downside, because that's where the sellers were convincing you, said, Baba, you don't have to doubt me. I mean control. I'm calling shots. But when the bulls are moving up, but the candlesticks are so small, not very convincing, they might end up pulling back from this. But you just have to monitor it there. I'm just giving you the areas where you can, that are sensitive, where you can find rejections. I'm not saying when the market opens, go and execute. No, we only execute based on the rejections that you're seeing, or whatever style of entry you use. That's when you say, oh, because now I've got this confirmation, I can enter. Until that happens, I don't have a trade. So now this is what we've been calling for, to say that it's just that here it turned a bit quicker, but yeah, we did get it to say that it is more like a pullback that we've been calling for, but it might end up being that long shot to the upside until it touches what, that monthly area of resistance. So we will just monitor it as it is moving up, and then we will see how it sort of it moves as it gets there, to say, is it gonna give us more interest as it is moving up, or what? So let's just remove some of this stuff so that you don't get confused. We can take this one out as well. So this is our H1. So this is going to be the last time frame that I'm looking for. So when you're inside that daily area of support, on H1, your trend line was there, and this was a new support, because this is the support that did what, that caused a move up and broke the area of what, the area of resistance there, and then it broke the trend line as well. That's why this pullback was a valid trade. And then this was just a mess, and then it continued like that. I'm just showing you what you can look for when we're saying look for confirmation. So even now, if you look at what we're having here, these candlesticks, they are not very convincing. Yes, the price is moving up, but it's not doing this to show that yes, the bulls are in control. So even these candlesticks that are showing indecision, that they might end up giving us a pullback to go back, because we know where we are. You need to keep in mind you are inside this and you have hit that H4 fresh area. So that's what you can expect from this one. But if this is taken out and then you get a pullback, you can buy from that H4 trend line. And then remember, this is going to be your next guy. So you've got enough space there. So that's what you can look out for on this one. This is what I teach. I don't want to complicate anything. Even the guys that are in the mentorship, I make sure that everyone understands the process, understands all the concepts before we can put them together and do a top-down analysis. So I make sure that when I'm teaching you the individual concepts, I try and simplify them as much as I can, so that everyone understands, so that when we get to the end, everyone can do their own top-down analysis and come up with their own trade ideas. So that's all that I had for you on Nasdaq. So you can try and monitor it and see how it reacts from this area, so that you can decide whether it has got high chances of hitting the next one or pulling back towards the zone that broke this. So it all depends on how it's going to react here. So just watch out. Just watch the price action there. Then you will decide on what to do. All right, that's it, guys. That's what I've been showing you all along. So I don't know if you still have any doubts, but yeah, if you've been following the channel, I'm sure you have improved by now. If not, then you need to come for the mentorship. All right, guys, I'll see you in the next video. So don't forget to like and subscribe if you haven't done so, and then I'll see you in the next one. Sharp, sharp.